We're just getting going.
I'm getting started right now.
Just getting started, dude. You were at what I say earlier, 500? No,
700.
700 already through October, dude. That's awesome. And what percentage of that's IUL?
100%.
100%.
Yeah.
You don't do anything else.
Annuities, I probably do a little bit, not too much.
Okay. Well, good thing is we're going to talk about IULs today.
Right.
And this is we're calling this piece here behind the policy, right?
Okay.
So, and I really want to give agents insight to basically how they can. The question here is going to help them get the IUL placed, because that's a big piece, right? It's one thing to sit down and talk about the policy, explain all the bells and whistles, get you interested,
right?
Get you to fill it out. But if that thing doesn't get approved, you're not covered. I don't get paid. We all lose, right?
Right.
I love Andrew Taylor when he says that. He used to say that about the cashback options. Like there's three great things about this. One, if you buy it, I get paid, right? And then once you buy it, if you die, you get paid. And then if you don't die, you get your money back, so you get paid. So there's three ways we all get paid here. But so my point is with the IUL,
I love it.
You love it, right? It's great.
Yes.
But same thing there. The IUL, you sell it, you get paid.
Right.
The client's protected, and they're also earning money, savings, interest, they're setting up their retirement. But what are some common reasons, Juan, that you see an IUL being declined for?
Mainly a couple of things that can deny people is health, which is one of the and so an IUL will be if you qualify for a term life. So anybody that sells like term life, if they qualify for a term life, they should qualify for an IUL health-wise.
Right.
And then the other one is some carriers, they pay a lot of attention on like DUIs in the last 5 years. Not after 5 years, but more in the last 5 years. That can disqualify, or anything criminal. Or a bankruptcy can also. So a lot of people ask me, hey, what about my credit? My credit is not that important,
right?
But if they have like bankruptcy or something real big, it can disqualify them.
Got it. So if you're a brand new agent or you've sold some mortgage, you're kind of going the mindset is if they were healthy enough for a term, they'd be healthy enough for an IUL.
Exactly.
You're not taking your final expense clients and putting them in an IUL. It's not going to work because of the underwriting.
Right.
And of that 700K that you've sold this year, how much of that are simplified IULs?
They're very, I go through what I call, most of them are going to be instant approval.
Instant approval.
So they're about 70% of my policies get instant approval because I qualify people. I ask them the questions.
Yeah.
And one of the good things is if somebody's doing it for a savings purpose, like if a 60-year-old person comes in and then they want to do it for a savings purpose and they don't qualify, I tell them, I say, hey, what about putting it into a 20-year-old or 25-year-old body for you? And then what I'm talking about is their son or their daughter, because I already found out how old was the daughter, and they're in good health. Got it. So I'll do an IUL for their son or daughter that carries his money.
Okay, so all right, let's play that out. I'm 50. Right? I know I don't look 51, but I'm 50 today. I got some health issues, but my daughter's 20. She's in great shape, but I want to save some, and this is for retirement. Right. So you would tell me what?
I would say, hey, Mike, looks like we will have a little bit of trouble because of the health that you have. But the good thing is I can put you in the 20-year-old body right now. Sounds good. And what we're going to use is your daughter's body to carry that tax-free growth of your money.
Got it.
And then it's going to be actually a lot cheaper. So that will be more savings for you. Yeah. And you'll have access to that money whenever you need it.
Right. And now, and then my daughter has a policy now.
Right.
But I'm putting this money in for me to fund.
And you're managing the money.
Yeah, I'm managing it. Yeah, that's awesome, dude. That's a great point. So, but, going back to earlier, well, first of all, the simplified IUL is the way to go.
Right.
Like, I've heard this from people. Like, I was talking to this guy. It's like, my numbers are real down. Like, why? Well, we wrote a bunch of IULs. We're waiting for them to pop. I'm like, what does that mean? What do you mean waiting for them to pop? Like, you just write them and they get approved or not. Well, you come to find out you're writing a bunch of fully underwritten stuff.
Right.
Which and this is what people don't understand is, yeah, the price you show may look better, but what happens 90% of the time when I'm showing you a ultra preferred rate, right? And you're going, oh, it's $5 a month, and then I put all this money in, then it comes back at a subpar, substandard rate. What does the client say then?
They don't want it.
They don't want it.
Yeah.
Instead of me going, hey, I can get you the simplified one at this rate. Yeah, it's not the ultra preferred, but it's definitely not that substandard. But there's no guesswork. There's no waiting for, months. And I'm sure you've written some of these fully underwritten ones, right?
I do the ones that are basically, it can be simplified. So I do a lot of NLG. So
Okay.
it's like NLG is a fully underwritten, supposed to be, but they're simplified.
Right.
So they don't go, so medical only for 65-year-old or older, or somebody that takes a lot of medications.
Right. Got it. And that's a good point too. There are some that are technically underwritten, but they're non-medical.
Right.
So it's very similar to a simplify. Underwriting is a little different, but you're not doing blood. Because once you do that, on average, how long do those take to get issued?
30 days or 45 days.
If you're lucky, right?
Yeah, exactly. Sometimes it takes longer than that.
Oh, yeah. And it all depends on the client's health, but I've seen some take 3-6 months.
Yeah, I'm still waiting for 2 months ago.
Yeah.
And then there's another one that it's 8 months now.
I believe it.
It's like,
but the key is you do that when you need to. But like you said earlier, would you say 80% of your?
Yeah, 70% of the people
were all
get
simplified.
Instant approval.
Yeah.
They get it because National does instant approval. And I think F&G started to do instant approval recently. So it's kind of like that.
Yeah.
Real quick.
Got it. We're going to move on to objections. So this is a topic that, if you ask me, you ever see those posts on TikTok? If you ask me about objections, I say this. But if you ask me on a deeper level, if you ask me about objections, I say you should remove them and avoid them up front, right?
100%. That's what I was going to tell you.
Yes. But if you ask me on a deeper level, Juan, there are some that may still come up. And these are, I'm going to kind of throw some at you. And you just play, hey, I'm the client. You're the agent. Tell me what you would say to this. So you're pitching me the IUL, right? And I go on. I can make more money in my 401k than that IUL. Sure. Yeah.
And then, so why here? Why you're here right now? And then it says, I'm sure. As I show you. Remember when I was showing you the chart of the red line where it goes up and down?
Yeah.
What happened if something happens in the 2001 or 2008?
Right.
Will you be happy with that?
No one's going to say yes.
And you mentioned that you like the green line that I show you better than that. That's where you wanted to keep your money.
Yeah.
Why was that reason that you wanted to keep that money there?
Right. Keep it safe.
Because you wanted to be not losing any money when the market goes down. And then that's the reason I feel like, yeah, you may be able to do better, but in the long run, I don't think you're going to be beneficial.
Right.
And then if you catch it on the downside, you're going to be like, I wish I would have went with Juan.
Correct. Yeah, that's huge. Now, it is, in a way, you're doing things in the beginning to avoid this, or when it does come up, you already have the ammo, right? Because you've shown them this chart.
Yes.
Where it shows how the IULs don't lose money. So you've done that beforehand. So if they go to bring this up, you go, do you remember what we said earlier?
Mm-hmm. And I asked them, now I showed them, and I asked them, hey, when I show you those, where would you like to keep your money?
Yeah.
The red line, the blue line, or the green line? And they all say the green line.
Yeah.
The green line, I said, which is the IUL line or the annuity line.
Right.
And then I say, okay, sounds good. Let's help you get there. Let's see if we can help you get there.
And that's a huge point. It's like I almost hesitate to even call it overcoming objections, because if you don't plant that seed early on, like if you never showed them that chart and I say that, now you're backtracking.
Right.
And then they're probably thinking, well, why didn't you say that in the first place?
Right.
But you have to plant those seeds. So here's a couple more, Juan. I've heard IULs have very high fees compared to other financial options.
The main cost is the insurance.
Okay.
And there's not really like a real cost to it. It's more the benefit. Because if you die, you pay $300 and somebody gets, 100,000, that's a big benefit.
Yeah.
Which if you put it in the bank, if you die 20 days later, how much is your family going to get?
Right.
You know,
Probably have
$300.
less. The bank will figure out some way to take your money.
So there's a huge benefit. So
Yeah.
I don't feel like IULs have a fee.
Right.
They have benefits.
Got it. I love that. And I mean, that is you're very clear that we're here for life insurance. Yes,
Right.
it has the same, but it is a life insurance policy where there's no one's confused about that.
Right.
If you're selling it any other way, you're doing it the wrong way. Like you need to let them know this is a life insurance policy. There is a death benefit. Now we can do things like you said this on your True Talk. You can design them, right? So if you know I'm all about the savings and the retirement, and I go, Juan, listen, I got term policies already. I don't really need the insurance. What would you do from a design standpoint?
I typically will design it the way that is if somebody is wanting for growth, then I design a minimum death benefit with the maximum cash value.
Yep.
And I always tell them, I says, you're gonna hear this is another objection that I overcome is that you're gonna hear on social media bad things about IULs.
Sure.
And I'm sure there's a lot of IULs that are bad, but they're not the IULs that are bad. Is the design that was done wrong. And says, now let me ask you this: if you were building a house, would you choose an architect that just got out of it and they have no idea exactly how to design a house, and this is the first house that they did, or will you choose somebody that is known for building homes and is an architect?
Right. No one's gonna pick the first one.
Yeah. So I says the reason you're with me is because I'm gonna design it the right way. I know. So this is the way that we're gonna design. So we're not gonna design. A lot of people come with bad IULs that I have to redesign correctly, and then so I show them the difference between a focus protection and a maximum fund IUL. And then when they see that, they know that they got the right architect.
Right.
And for those of you who are new, you become an architect just by listening to me.
Absolutely.
Right now. It's like, you know that basically you already know how to design IUL, but there's more than 90% of the agents out there that have no idea, or State Farm doesn't know how to design an IUL.
No.
So that's just because they got the license doesn't mean they know how to design it.
Right. Absolutely. I also think that a lot of times the objections that you get are things that people just heard on social media. They read somewhere. Somebody said, I mean, remember Susie Orman used to trash annuities, right? And I remember, like, you'd go into an appointment and bring up annuity. Well, Susie Orman says they're bad. Like, oh, okay, all right. Is she here? Like, does she pay your bills? She's talking about variable annuities. We're doing fixed income. But same thing, a lot of this stuff you hear, it's just people just throwing out shit that they heard or read. Like, here's one. I've heard the cost of insurance gets higher every year and will eventually eat up my cash value.
Fiction.
So,
so what I tell people is how that we got a competitor that sells basically term, invest the difference. So when I run into that, I love it. I love it because I can beat them every time.
Yeah.
So if I take term and invest the difference versus an IUL, then IUL is both. But the best thing is if you're doing a term invest the difference, your term is going to expire 30 years later, per se, and you're going to have the investment per se. But now you don't have a life insurance. Now, if you do an IUL after 10 years of max funding the IUL, you actually have an IUL that is paid for the rest of your life. So that means you already got a life insurance permanent, plus you have the tax-free growth of the money. So if you continue, you actually have both.
Right.
So there's no, I mean, which one would you rather have?
Yeah.
Both or the ones that expires 30 years later.
Right.
That's how I close.
Gotcha. Now, the idea of the cost of insurance, it does increase with IULs, but if they're set up the right way, it's never going to be an issue.
And max funded, IULs is not an issue because it takes care of itself 10 years later, or you can do it even 5 years. If you max fund totally like to the MEC, then you're doing 5 years or less.
Right. And that's, I mean, just what I said earlier, they're just throwing out things that maybe they read somewhere, half paid attention to, and they're just trying to mess with you.
Right.
You know, and going back to what you said earlier about being the architect, the design, if it's designed right, none of these things apply anyways.
It doesn't apply.
We're gonna wrap with this. A few scenarios I'm gonna throw at you, where, and really the goal here is like for brand new agents, it's hard to prepare them for every situation, right? Like, but would you agree that if you've sold insurance for a year, you've ran into just about every situation you're gonna run into, right?
Yeah, if you were working, yes.
Yeah, that's true too. Yeah, if you're working, but I mean, you sell over $1 million in a year. You've seen it all.
Oh, yes.
There's not a scenario when you get on, Zoom. You do all these through Zoom now.
Everything, 100%.
There's not a scenario now where you hop on Zoom where you're like, wow, I never ran into this before. It's like, oh, I know this one. Oh, I know that one. This is how this goes. So I'm gonna throw 3 different scenarios at you, and you just, if you can let people watch and know what you would offer them, how would you even steer this conversation? What, as the architect, what would you design for them, right? So I'm a healthy 50-year-old, right? I have nothing saved for retirement. What can you do for me?
Yeah, I will max fund an IUL for you.
Yep.
So what I'll do is I'll ask you for the budget.
Okay.
So the main thing is I always ask, and you can go through their expenses and everything if you want to. But a simple way to do it is just ask them, says, okay, just like in the 401k, you want to put money every month. Here, you're going to, and I want to do it based on your budget.
Okay.
So some people, they want to put like $500. Some people want to put $1,000. Some people want to put millions into it. So which are you, like, how much do you feel that you can put every month?
Let's say $500. I could do 500.
That sounds great.
Yep.
So we'll put 500, and then what I'll do is I'll show them how at age 65 they're gonna stop paying for that, this 500, and how it's gonna continue growing. So if they didn't need the money, they could continue growing it, and it's gonna be a tax-free growth.
Got it. So you'd illustrate. You said max fund. What carrier would you go? What would be your go-to product?
NLG. I always I'm an NLG go-to.
Got it.
Yeah.
So let's switch it up. I'm 35. This is closer to me. Juan. I'm 35.
Yeah.
I have a maxed out 401k already through my employer, but I want to retire earlier than 59 and a half. Because that's the thing about the 401k. Before 59 and a half. Who came up with that math? Why is it not 59 or 60? Why is it 59 and a half? That's a whole nother story. Yeah.
I know.
But I want to retire prior to that. I'm only 35. What would you offer me?
I would say definitely you can.
Yeah.
But you need to make sure we can go backwards, like how much money you need to put in order. So we don't want to put like more than 10% of their income. So if this person is making like $30,000 or $40,000, they're not gonna be able to do that. And I first asked them, how much money do you have in the 401k?
Yeah.
And then based on that, then I know. And then the other part is how much money can you put? Like if somebody at that age, they put $1,000 a month, they're making over $100,000.
Right.
We can do it.
Okay, so let's say I'm making $150K.
Yeah.
Right. I got, I don't know, $400,000 in my 401k. And I can do $1,000 a month.
Yeah. So at that moment, I can show you a max fund IUL, just like the one prior, but then this will be for a 35-year-old, which is going to grow tremendously because by the age of 50, he's going to have quite a bit of money there. By the age of 55, he's going to have a lot more. And then so I can show that person at age 58 or 59, if they want to retire, between the two, the 401k and that, they'll have a tax-free retirement for the rest of their lives.
Last one for you. You're going to have to really put your imagination to use here. I'm a 47-year-old single mom. Okay.
Single mom.
Type 2 diabetes, no coverage. I want insurance to make sure my kids don't lose the house if I pass.
Yeah. That one is more protection focus.
Yep.
So that definitely see, if I'm an NLG go-to person like me, then I'm gonna do a protection focus IUL, which is the same. They will qualify if they only take one medication on that. If they don't, you can go to somebody like Americo IUL or one of the IULs that take like
Got it. So type 2 diabetes, if I'm on one med, you're going to NLG.
NLG or
then
FNG
F&G.
or those are great. You still have a permanent policy, and you show them payment for the rest of their lives, just like
Got it. So you
like
structure like
mortgage
a whole life
protection.
almost.
Yeah,
Yeah.
just like, but it's cheaper.
Yeah.
In a way, it's cheaper, and then you can show them even how they can get their money back if they wanted to. Like, so if he's a 47-year-old, I would say in less than 20 years they'll have their money back.
Yeah.
Within an IUL.
Got it. And that's the would you say protection focus?
Protection focus.
So explain to someone who's brand new, and give them the difference between the max fund and the protection focus.
So max fund will be based on their budget, how much they want to put per month.
Okay.
And then that's basically, they can lower or up. In a protection focus is you put the amount of life insurance into it, and it calculates what's the minimum amount that they need to pay every month to keep that policy for the rest of their lives.
Okay.
And then they can put more money if they wanted to create a cash.
Right.
account.
You can kind of do both, right? Like
Yeah.
if you really want, like if I said, and this isn't, I'm just throwing this out as we go. If I go, listen, I want to do some stuff for my retirement, but I also don't have life insurance and I got 4 kids.
Right.
What would you do then?
If you have no life insurance and you have 4 kids.
Yep.
Yeah.
But I also
definitely-
want to save for my retirement.
Yeah, you can definitely play with both. And if it's about how old?
Let's say my oldest is 16, my youngest is 8.
And then you are about 45,
I'm 40. Yep.
40. Yeah, I will definitely use a max fund.
Okay.
IUL. But I will probably do a level instead of a term. I mean, an increasing at that point. And the reason is because the level will give them a much bigger life insurance right away, just in case something happens to them.
Yeah.
So if that's important, so I ask them, says, which one is more important to you, the savings part or the protection, or is it both just equal?
Yeah, let's say they're equal.
And then so I will do either a balance death benefit, which is kind of like a little bit more towards, but it's still saving a lot of money.
Got it.
In the NLG, if somebody's NLG, but if, that just making sure that they still save a lot of money, but they have a pretty good life insurance.
Got it. So I mean, it really sounds like as long as the health, is at the level where you can qualify, there isn't a client that the IUL wouldn't make sense for.
No,
because you can design it however you want or to whatever their needs are.
Yeah, and I tell people there's 2 buckets in the IUL: the bucket for the life insurance and the bucket for the savings.
Yeah.
So what you want to do is design it the way that this bucket and this bucket makes sense for them. So you can design it to minimize the life insurance if they're not looking for that,
right,
and maximize this one, or you can design it to be protection focused, which is about half and half.
Yeah. Absolutely. Well, this is awesome stuff, dude. Really good stuff. Really appreciate you coming up, doing this, and sharing with everybody.
Thank you.
Let everybody know where to follow you on social if they want more, because you do a lot of this on your social media as well.
Yes, I do. Solid Financial Plan.
Solid Financial Plan.
Is where you can find me in all social media.
And you can also find Juan at annual convention. He's going to be there.
Oh, yeah.
Getting all kinds of awards. So,
yes.
Actually, real quick before we wrap, let everybody know why they should go to FFL convention right now, get their ticket, and meet us all in Irving, Texas in February.
Oh, yeah. Every serious producer is going to be there.
Right.
Everybody that is with FFL, if you're not at the FFL convention, I say I don't see a reason why you're in this business.
Exactly.
Like it's kind of like it should be a must.
It should be. Yeah.
It should be like if you're working with IBM, you have to go to a national convention.
Correct. Well, I'll put it this way: you sold $1 million last year. I don't know anyone that sold $1 million last year that didn't go to the convention the year before.
Yeah,
that's a fact.
Or even those that sold 300,000-400,000, they all go. I mean, like if they want to, and especially if you want to improve. If you feel like you got it and you're the master, you're the master of everything, then maybe
you do your own event. We'll come to yours.
Yeah. I never feel like that way.
Absolutely. Well, thanks again, Juan. Appreciate you guys. Appreciate you tuning in, checking us out. You know where to find us. Hit subscribe if you haven't already. Share this with your agents and check us out every week right here on The Next Level. We'll see you next week.